And welcome back. Recently, we have seen some big declines in the stock market. To give us an update of what's going on, our financial advisor, Bruce Allen of Bruce G. Allen Investments, joins us. Good morning.
Good morning, Gary.
Good to see you. So this morning, the stock market opened 46 points down, the Dow did, but that's not too bad compared to where it's been this week.
No.
So what's going on?
Well, we've got a couple things. First off, the stock market is down overall this year about 12.5%. But since the middle of June, hope has been abundant as summer has sprung. So that's as poetic as I get. So as the flowers have come out, the stock market has risen. But in the last week, stocks are down about 3.8%. And all eyes are on Jackson Hole, Wyoming. In August 16th, Tuesday of last week, we're at 4,300 on the, a little over 4,300 on the S&P. And as of last night, we closed at 4,140. We're down about 3.8% in the last week.
And they're on Jackson Hole because the Fed is going to be meeting, and
Yes.
what the Fed does, the market reacts to, right?
It does. And what we've also seen is in the bond market, Gary, since the beginning of August, interest rates have been rising. And there's a lot of anxiety that the Federal Reserve may raise rates very dramatically. What you can see here is since the beginning of August, the 10-year Treasury bond, which sets rates for many things, including mortgages, has risen from 2.6% to over 3.1%. So there's been some upward pressure on rising rates.
So it's kind of a catch-22, I guess, because they're trying to raise interest rates because of inflation,
Yes.
to try and level out inflation, but that's what's causing, I guess, the market to drop. And so what's to be done?
Jay Powell has more gray hair than you or I,
Yeah,
as he has two conflicting jobs. One
Yeah.
of them is how do you promote maximum employment, grow the economy so everyone has a job? Sometimes at the opposite end of that is how do you control the rising prices of inflation?
Right.
And so what he's doing is trying to slow the economy down by raising interest rates. The battle that he has is how am I going to get inflation back down to 2%? And it's been running at about an 8% rate this year so far. So he's got a big job. The bond market, as opposed to the Federal Reserve, thinks
Right.
that we're going to have a recession. The stock market's bouncing back and forth, as you just saw. We're up, we're down, we're up. And so we're really, the stock market's struggling with this data. But when you have a battle between the stock market and the bond market,
Bond market usually wins. Yeah, okay. Well, we have seen some signs, though, that inflation may have peaked. I mean,
Yes.
gas prices are coming down, that sort of thing. Do you think that'll affect what's happening to the stock market here?
Yeah, I think that what the stock market's been happy about is the price of wheat and oil. Some of the commodities that really shot up during the Ukrainian war, they have come back down to below the levels of where that initially started. So that's good news on the inflation front. And as we go forward, it looks like we will have less pressure on inflation, but the estimates for next year are still in that 3.6, 3.7% range and not at 2% where Jay Powell would like them. And that's what the market's worried about. And they're worried about his speech tomorrow, right after you guys get done with your broadcast.
Yeah.
Jay Powell will be going on. And he is going to be talking either tough, moderate, or very softly about inflation. And the markets want to see what's he going to say and what hints is he going to give about what's going to happen in the September rate hike.
Okay, stay tuned and remember the long haul always. I got that from you. That's that's what you always say to investors.
I'm glad you're giving me credit for that.
All right, that's it. Thanks for coming in.
Absolutely.
Appreciate it.
Good to see
Good to see you, Ed.